Thanks for joining us at xm.com. This is a special report. Iran delivered a well-telegraphed and advanced attack on Israel a few days ago. Of course, we won't delve into politics, but let's see how financial markets responded to this. I'm Christina Marujas. With me today is our senior investment analyst, Marios Hadjikyriacos. Marios, markets had a peculiar reaction in all this. Oil prices, which you would expect to rise, actually fell. Nevertheless, gold and stocks underlined the market's uncertainty. So what is driving the market right now?
Hello, Christina. Look, it was definitely a strange market reaction. So you saw the market being a little bit split. Oil prices and bond markets didn't show much concern about what's happening in the Middle East. But on the other hand, as you outlined, gold and stock markets did react quite significantly. So what's behind this relative calm, let's call it, in the markets? Well, my opinion is that most investors are looking at this as almost political theater, right? And I mean that in the following sense. The Iranian attack, even though it was really large, more than 300 drones and missiles, it seems to have been more symbolic in nature, in the sense that they warned the Americans that they were going to attack several days even before the attack happened. And after the attack, Iran took to Twitter to say that the matter is now concluded. So you see a situation where Iran launched a half-hearted attack, let's say, that would almost surely be intercepted. And I think the reason they did that was to send a message that they could really strike Israel if they wanted to, but at the same time, they're avoiding a real escalation that leads to war. And this way, the theocratic regime in Tehran can also save face with domestic audiences, in the sense that they replied to Israel. So my sense is that the markets are looking at this and saying that this was a way where Iran could respond, but at the same time avoiding a real escalation, and that ultimately cooler heads will prevail. That's why I think we saw the mixed market reaction that we've got in the recent days.
So currently we're in wait-and-see mode, whether and when, and more crucially, how Israel will respond. But what could that mean for financial markets?
Yeah, so look, the concern really is the scope and scale of Israel's retaliation. I think that the real concern in the market is that this could devolve into a tit-for-tat cycle of escalation that ultimately might go too far, right? Accidents can happen when nations are exchanging missiles. So that's the concern in the markets, that some kind of accident could lead to a broader regional conflict. Now, if we keep seeing these concerns in the markets, I think we're likely to see oil prices rising on concerns of supply disruptions, and that might also help to boost gold prices. Now, on the flip side, if Israel takes a more measured approach in its response, that might make traders more confident that the aftershocks are going to be contained, and that could spark a recovery in the stock market at the expense of oil and gold prices as geopolitical risk is priced out. So to the bottom line here, Christina, for me, most signs point to de-escalation. Neither side wants a real war, and nor does the United States. Now, having said that, it's an unstable situation, and there's always a risk it can spiral out of control, even by accident. So I think we're going to see geopolitical fears linger in the markets for some time.
Definitely the story is unfolding. Marios, thanks so much. This was a special report here at xm.com.